we like to talk about community personal finance, which is alternatives, but sourced and helped through a community. And so the alternatives, when you mention the alternatives to your neighbor while they're talking about their 401k, they're going to look at you like you're nuts. Syndications, alternatives, that's scary stuff. And my thought is alternative investments, that's where you live. That's where you store your stuff. That's where you go out to eat. That's where you shop. It's where you go to work. Real estate, right? How is that alternative?
Welcome to the Threefold Real Estate Investing Podcast. This is the podcast where you'll not only learn how you can achieve massive success in multifamily real estate investing, but also how you can simultaneously pursue great relationships with your family and a better walk with God. You can achieve financial freedom through real estate investing without sacrificing the relationships that mean the most to you. Now, here's your host, Lee Yoder.
Welcome back, Threefold listeners. I hope you're having a great week. We've got a great guest today. I'm really excited to share with you. Jim Pfeifer is joining us from Columbus, Ohio, just up 71 from me here down closer to Cincinnati. I've got a lot to say about him and this group he runs, but I'm just going to go ahead and read his bio first, and then we'll bring him in. But Jim is one of the founders of Left Field Investors, this awesome group. Like I said, we're gonna get more into that, and he's also the host of the Passive Investing from Left Field podcast. Left Field Investors is a group dedicated to educating and assisting like-minded investors. Jim not only advises and helps people get started in passive real estate syndication, he also invests alongside them in small groups to allow diversification among multiple investments and syndication sponsors. Jim believes the most important factor in a successful syndication is finding a sponsor that he knows, likes, and trusts. Love that. Get more into that. A little bit about Jim going further back. He earned a degree in finance and marketing from the University of Oregon and a master's in business from the Ohio State University. I shouldn't be saying that so confidently. They just got smoked this past weekend. So a little bit down on the Ohio State University, but I've got 3 kids, loves to ski, play ultimate Frisbee, and cheer on the Buckeyes. Jim, are you hurting like I am?
Yeah, I've just kind of blacked that out, to be honest, Lee.
Okay,
I'm not, it didn't
let's
happen.
Not talk about it. Good. Let's move on. Let's talk real estate. We're here to talk real estate.
Yes,
not our Buckeyes, who, man, has the tide turned on that.
Yes.
Anyway, Jim, good stuff. Hey, so a lot there, and we're going to get into a lot of that. Definitely want to talk about Left Field Investors. I love that group. I'm a part of that. We just had a great meetup a little while ago. We'll get into all that. But Jim, can you take us all the way back? What were you doing before real estate, before you got into it and all that? And then how'd you get into it? What got you interested?
Yeah, I was an accidental landlord is how that happened. We had our third kid, and our house was too small. We built a new one, and it was perfect timing in 2008 to try to sell a house. And that's facetious for those of you that don't remember. But we couldn't sell our house. So we rented it out for 5 years, and I absolutely hated it because I was managing it myself, had a great tenant, but I just didn't like having to, change a light bulb or whatever needed to be done. Yep. And after 5 years, I was ready to be done with it. And I kind of looked at the financials of it. I thought, this is okay. But, and I went to sell it. My real estate agent said, well, why don't I just manage this for you? And we noticed that, hey, I had the house paid off. And he's like, well, why don't you just buy a couple more, get a loan on that one, buy a couple more. And so I did that and basically turned one cash flowing asset into 3 cash flowing assets. The return on your home equity is always 0, right? So I financed that. Now I had 3 cash flowing assets, and I had someone to manage them for me, which made all the difference. And so that got me off and running into real estate. And at the same time, I was kind of getting into the financial advising world. And I was always big into stock market, mutual funds. Right out of college, I was stuffing money in my 401k. And as I became a financial advisor, they teach you, they give you education. And as I was learning about money, I was a real estate investor at the same time. And I realized, wait a second, all the stuff they're teaching me about paper assets and how to maximize your wealth, it really does better over here in real estate with real assets. And so the more I was learning about financials from my financial advising company, the more I was learning that real estate is the place to go. And so, I was an advisor for about 7 years, but at the end, I was doing all real estate, and I prided myself in always putting my clients in the same investments as I was in, but I couldn't do that with real estate because I wasn't licensed and I didn't get paid for it. So eventually I knew I had to get out of financial advising and go full-time into real estate. So I did active investing for a while, which I thought at the time was passive, and I wasn't very good at it. I wasn't a good asset manager. All the properties, they didn't cash flow like I expected. But when I sold them, I made a bunch of money because the market saved me.
Sure.
And that's when I realized I wanted to be a passive investor and hire someone to be my asset manager. And so that's what I've been doing for the last number of years. And my results are better. My life's better. Everything's better because of it. I'm making more money because of it. And so I'm just really excited about passive investing.
Yeah. So many good things there, Jim. I mean, I think a lot of people, have some similar situation where they might become an accidental landlord. They kind of stumble into it. So like you said, after 5 years of managing it, and it was easy, but you didn't like it. I had a similar experience. The only thing I've ever managed was a duplex. And again, I mean, like you said, I had great residents. They were easy. I just didn't like it. I didn't enjoy it. And I knew I don't want to do more of this. And you're kind of the same spot, but you look at the financials and you're like, well, but I would like to do more of this financially. This is great. Right. So you get a few more, and the game changer is having somebody manage it for you. And so I'm a big advocate of that as well. Even if you want to be active, especially as you get started, I think let somebody else manage it. I mean, I know when I got into multifamily, it was just a 16 unit, but it seemed so big to me. But as soon as I was like, well, but somebody else is going to manage that, and this is nothing to them, then it was like, it clicked, and it's like, well, this isn't that big of a deal because it's going to be easy for them. So you kind of got over that hurdle, but at the same time, you said something really important as you got a few more, even though you weren't the one managing it. So you certainly weren't as active as if you were the one, that was responsible for fixing the toilets and going and collecting the rent and evicting somebody if that has to happen. You're not doing all those things, so you're not as active as you could be, but you're still active. Maybe talk a little bit more about that, because I think that's very important, that if you're the general partner, if you're the one that signs on the loan, if you're the one, kind of at the end of the day responsible, as you named it right, the asset manager, even though you may not be the property manager, to some degree, you're still active. Can you talk a little bit more about that?
Yeah. So I thought I was passive investing. The first 3 properties I bought, the property manager was awesome. This real estate agent, but he was also their Class A properties and really nice suburban. It wasn't that difficult, to be honest. But it got me into, I started looking at turnkey. So I was buying turnkeys in Memphis and Indianapolis. I found out one door was awesome. So why wouldn't 4 be better? So I thought I'd go buy a 4-plex, and I got, talked into buying a 22 unit. Well, the problem was I was trying to be passive, meaning I was the asset manager, so I didn't even know what that was. And I was having property managers do everything for me, but the property managers were ineffective and they weren't doing the things I wanted them to do. On the multifamily, I really had it wrong. I thought that my cash flow should pay for renovations, right? But that's not how it works. What I needed to do was clear everybody out, renovate, and then put people in. But I didn't do that. And I wasn't ready to do that. And I didn't understand I needed to do that. So there's constant conflicts with the property managers. On my single family turnkeys, I went through 2, 3, 4 property managers, and I just couldn't find a quality property manager. And it was taking up all of my time managing the property manager. Right. So if you have an excellent property manager, maybe you can be a little bit more passive. But if you own the property and you are in charge of it, meaning when something goes wrong, somebody's going to come to you and say, hey, there's something wrong with this property. You're not passive, you're active. Now, if you're in a syndication and you're an LP, if something goes wrong and the air conditioning unit blows up, not my problem. I might hear about it in the monthly or quarterly report, but no one's coming to me and saying, hey, Jim, there's something wrong with my air conditioning unit, and that's the difference. Is I think a lot of turnkey people, or people that buy turnkey properties or similar things, they think they're being passive like I thought. And the cash flow just wasn't there because something always went wrong. Now, the market saved me, as I said, so I still made money on all those, but I was not a good asset manager, and you need a good asset manager and a great property manager to be successful at real estate. And that's what I've realized. And so now I hire other asset managers and task them with finding the property manager and taking care of the asset.
Yeah. And I'm glad you said that, Jim, and being, humble in that, the market saved you, because I think today it's wise to think that way, because you really have to count on that cash flow. If the cash flow is not there, you don't know that the market's going to save you. Sure, for the last decade, it has. I mean, everything's gone up, for a straight decade, but it doesn't always. And already we're starting to see, it's rolling over a little bit. And I mean, none of us know if it's really going to go down and how far down it's going to go. But, this just shows people, I mean, hey, just if you're investing in the stock market, I think you see now, after a decade of what seemed like straight up, we're down on the year. We're going to end the year down, and down significantly. So hopefully people are starting to realize, okay, not everything goes up. And even if your property doesn't go up, if you're managing it really well, like you laid out there, Jim, you're still going to cash flow. And that's what's important. That's going to hold you and sustain you. So then you can sell whenever it makes sense. But if you're not cash flowing and you're forced to sell, that's when you can actually lose money. And so thank you for laying that out. And then, talking about property management and asset management, totally agree with you there. And Jim has kind of set it up for us that, the asset manager, the buck stops with you. Sure, the property manager is going to be doing a lot of things, but when something goes wrong and somebody has to decide what to do, that's you. That's the asset manager. And a really good asset manager is very involved in the property. I mean, that's what we do here at Threefold. We want to do that full time. We're the asset managers. And I mean, yes, we have third-party property management. I have no interest in being a property manager, but I am talking to them all the time. I mean, every single day we're talking to our property managers. We're out at the property. So we're very active, and yet we still need a property manager. So you're absolutely right, Jim. You need a property manager. You also need an asset manager, and that asset manager has to be very active. So if you've got both of those things, now you're passive. But if you're either of those things, certainly if you're both, you're active and potentially very active. So Jim, you figured this out. We're educating people on that now. You're doing a lot of that. We'll get more into the education you guys are doing there at Left Field. But for you, Jim, so what was the next step? So how did you make that transition when you decided, I want to be really passive? I want to have a property manager and an asset manager between me and the property. How'd you go about that?
Yeah, well, I stumbled into it just like I stumbled into real estate, right? I went to the real estate guys had a syndication seminar. They do those, I think, quarterly or maybe semi-annually. But I went there thinking I wanted to be a syndicator. I wanted to buy apartment buildings and be an operator. And I got there and I quickly realized, nope, I want this LP thing that they're talking about. That sounds pretty good. And I wanted to invest in other people's deals. And so I realized that while I was there, but I had no clue what I was doing. And so, as usual, when I have no clue what I was doing, I just jump in. Right. And so I met people at this seminar, and they're operators. And I had this old 401k in a self-directed IRA burning a hole in my pocket. And I just started handing it out to people. Oh, hi, you're a syndicator. My name's Jim. Here's some money. That's basically how I vetted my sponsors. And it was not the best way to do it. Now, some of those deals have been fine. Some have been not fine. And that was my first way of finding sponsors. And obviously, I've improved it since then. I've kind of had three stages. So that was stage one. Then I started selling my my active investments because I knew I was done with that. And I started putting, some non-retirement money, which I probably have it backwards there, but I value that a little bit more because it's money I'm using now, right? Rather than something 20 years from now, or I guess 10 years from now. So I started listening to a bunch of podcasts. And that's how I was finding sponsors. So I'd listen to a podcast and I'd call the person on the podcast. I'd have an hour-long conversation with them. They'd send me a deal. Maybe I'd talk to them for another 20 minutes. And then I'd have to make the decision, do I wire this person 50 or 100 grand or not? Right. And I had no way of knowing, are they a really awesome marketer? And that's why their podcast is so great. Yep. Or are they a good operator? And there was no way to know that. So that was how I was finding sponsors. And that was better than my first, just throwing money at somebody. Yep. So it was an improvement, but it wasn't really that great either, because you just can't get a sense, because these are long-term illiquid investments and you have no control at all over them after you've sent your wire. So to figure out if someone's a good operator or not, I can't invest money and wait 5 years and then think, okay, now I know whether they're good or bad. Right. So now the way I find and evaluate sponsors is I only invest in a sponsor that's new to me if they were introduced to me by somebody in my community who I know, like, and trust, who's already invested with them. Yeah, that doesn't mean they have to have gone full cycle, but they've been in the deal long enough to know that the wire landed someplace legit. They're sending out distributions or reports as promised, and things look like they're going okay. Then now I still do all the same due diligence and dig into them and ask them questions and all that, but I'm starting from, 100 steps forward. It's trust transfers, right? And so that has made all the difference in how I evaluate sponsors now. And that has allowed me then to completely exit all of my active investments. I only have one left because my brother-in-law is living there. But other than that, we don't own any property other than through real estate syndications.
I love that concept, Jim. So I know the answer to this because I'm part of the group now, but so how did that evolve? So obviously if you want to keep investing, Jim, you need to know more people, right? You need to increase your network, increase your community, so that when you're vetting more deals, you have a better opportunity that someone knows them or knows somebody that knows them, right? So, kind of just talk us through the progression of this community that you've built.
Yeah, well, let me back up real quick and just say one last thing about finding sponsors, because the yellow pages, well, for those of you that are old enough to know the yellow pages, that's a great to find a restaurant, right? Because if you have one bad meal, that's fine. But if you're looking for an accountant, an attorney, a property manager, an asset manager, you're not going to use the yellow pages, right? That's where you're going to use your community and your network. And so that's why I think it's so important, because people you trust have used somebody, they're going to recommend it. So that's what I do now. I use professionals to do stuff. I don't do my own taxes anymore. I don't write up my own legal documents anymore. I used to try to do that to save a couple $100, and it's not worth it. So pay professionals to do stuff, and that includes asset managers and property managers. But as far as the community, I needed a community because I wanted to learn from others and teach others. And so we started this small 12-person little dinner club in Columbus that we were going to, just trade stories about passive investing and go out to dinner once a month. And, our first meeting was March 18th, 2020, which is when, the world shut down for the pandemic. So we never met. And in fact, the first time we met was the meeting you were at in October, our Left Field meetup. But really the intent of Left Field Investors was we were going to start this little 12-person mastermind. And so many people that heard about it through either my neighbors or friends or, former financial advising clients heard about it, and they kept wanting to join because there's a huge interest in this. So we slowly grew it, and it was easy because it was virtual, right? We could get some great guests on our Zoom meetings because everyone was sitting at home with nothing to do. And so quite unintentionally, this group grew to now, more than 1,200 members of Left Field Investors. That's and awesome. We really are just dedicated to helping people learn how to become passive investors and providing a network for them to get that education and to find others that are like-minded. And we say like-minded a lot, and I don't mean everyone thinks the exact same thing and we walk around like robots. What I mean is like-minded people who want to maybe, instead of, cramming money in their 401k, want to find a different way to build wealth for their families that creates time freedom and, or whatever you're trying to build with your wealth, but it's going to affect your life. And that's what we're trying to do. And we're trying to broaden the message, because if you walk outside your front door and you look at your neighbor and you say, hey, let's talk about personal finances, right? They're going to talk about conventional, traditional finance, their 401k, their IRA, the mortgage rate or the interest rate on their mortgage. And, we at Left Field Investors, we like to talk about community personal finance, which is alternatives, but sourced and helped through a community. And so the alternatives, when you mention the alternatives to your neighbor while they're talking about their 401k, they're going to look at you like you're nuts. Syndications, alternatives, that's scary stuff. And my thought is alternative investments, that's where you live. That's where you store your stuff. That's where you go out to eat. That's where you shop. It's where you go to work, real estate, right? How is that alternative? And these paper assets that have no current benefit that you put your money in and you hope one day that you can sell that paper asset for more than you bought it, right? With no current benefit. Or you can go over to these scary alternatives, invest in a real asset that you can look at and touch that provides a current benefit in the form of cash flow. And then hopefully, there's some appreciation on the back end. But as you said earlier, your main focus is the cash flow. And so that's kind of how I look at it. And Left Field Investors, our whole purpose is to serve that community, grow that community so more people can get exposed to this and more people can be on the journey to financial freedom, whatever that means to you. It could mean ditching the W-2. It could mean reducing the hours. It could just, whatever it is, that's your choice. But you can't get financially free in the stock market. If you look at all the wealthy people you've ever heard of or tell me one that's made money in the stock market. You make money by buying businesses or owning real estate. That's how you build wealth that can change your life.
Yep. Yeah, really well said. And Jim, as you were kind of setting that up, that's kind of how the name Left Field came about, right? That if you try to talk to your neighbor about alternative investments, they're going to look at you like, man, you're way out in left field, right? Is that kind of where the name came from?
Yeah. Everyone thinks we're big baseball fans, but that's how the name came out. Because when I was a financial advisor and I was getting into this real estate stuff, my former colleagues would all say, oh, Jim, he's way out in left field with that stuff. But it's the same, right? It's also, if you talk to your neighbor, they're like, oh, you're nuts. And so everything in our community is baseball themed, although we aren't really baseball fans.
Yeah, because that left field. I love that, Jim. And going back to what you were saying when you were, a financial advisor or wealth manager. I mean, it's so true that it's just wild that they, real estate's not a part of it. And I think you just make such a great point. While it may sound like it's out in left field, you're like, these are the houses you live in. These are the apartments you like. What's more just, I don't know, blue collar and tangible and and real than a building that people live in compared to anybody can go invest in Tesla where Elon says, I mean, Tesla's worth every other car manufacturer combined because they've got this brilliant idea that's going to maybe change the world. And they've, barely made a dime in 10 years, but someday they're going to, right? Like,
right.
So love how you set that up. And then Jim, the community of left field investors, I'm just not surprised at all that you had such a demand for it, because if you want to get really into real estate, almost all of the coaching and teaching is how to be active. So you can go find a program around any corner to teach you how to go syndicate. And there are probably too many of them and too many people getting into it. But with the passive side, there's not. And then again, you go to traditional investing and no one talks about real estate because like you kind of can't, right? So there's such a market for this. So so glad you guys built this community, and you can tell it's just blown up because people are just seeing so much value and there's so much demand for it, because people are saying, I mean, especially this year, right, Jim? Like people are starting to go, yeah, I guess the stock market doesn't always go up. And I guess, the Fed turns off the spigot and starts going the opposite direction. All of a sudden it crashes. And wow. And now we're headed for a recession. Meanwhile, real estate, if you've got cash flowing real estate, you're doing just fine. Rents aren't going anywhere. So, I think there's such a demand for it. So what are some of the things that you guys offer there, Jim? If somebody's interested in left field investors, there's so much, but just kind of what would somebody be, what would be available to them if they start looking into left field investors?
Yeah, there's two parts to it. One is completely free, and the other is $199 for the year. But the free part, we do almost weekly or even twice a week. Now we're doing different webinars. They're either lunch and learns where someone will come on and talk about an asset class or an investment strategy, or we'll do deal webinars where one of our trusted partners will come on and talk about one of their deals. And a lot of times they will have improved terms, better terms for our community if we hit certain investment thresholds as a group. So that's some of the stuff. We also have a monthly meeting the fourth Monday of every month. We have, we have a blog, we have a master class, which kind of takes you from the start, what is a syndication, all the way through to how to evaluate a sponsor and how to analyze a deal. So there's just a lot of content that'll help you learn on there. And then the paid site, there's some investing tools that help you analyze the deal, screen sponsors, things like that. There's also one of the most popular features is our forum where, people are talking about, you can post something on, hey, what has anybody ever heard of threefold? And then people, start saying, yeah, I've heard of them. They're great. Or, whatever. There's just a lot of talk on sponsors, asset classes, different deals, different investing strategies and things like that. So there's just, there's a ton of content there. And then if you really want to dive into the community and get to know more people, the infield community, our membership community is the way to do that.
Yeah, absolutely. And that's all at leftfieldinvestors.com, right, Jim? Just spelled out.
Yep. Yeah, it is. And there's a subscribe button on the top right. That's the best way to keep informed about everything we're doing. And you'll get now, because we have so many meetings, there's a lot more emails. So it might fill up your inbox. And so I just recommend give it a try. And if you get sick of the emails, just unsubscribe and we'll talk, we'll see you later.
Yeah. But I mean, I don't know anybody else, Jim, that's bringing sponsors in and kind of vetting them as a group and then getting better terms. That's unique. I've just not heard of that anywhere else. And then all the education to go with it. It's a great resource. Anybody interested in passive, I don't know why you wouldn't pay $200 a year to go be a part of that. But that's my shameless plug for you guys.
Thank you.
Just a big fan, Jim. Hey, on the backs of that, I always like to ask my guests kind of as we wrap things up, what do you think is a key ingredient to being a successful real estate investor? And I always ask it like that, but let me ask you just specifically a passive real estate investor. And you kind of started with how you vet the sponsor. Maybe you kind of go in that direction, but what is it that makes a successful passive real estate investor?
Well, I know you had a couple of other guys on here, and I think we all say the same thing. So I hate to be repetitive, but it really is community. Yeah. I tell, I talk to 3 or 4 investors a day, and I tell every one of them, it does not have to be left field. Obviously, I'm biased. I think we have a great community, and I appreciate your kind comments about our community. Sure. But if you want to be successful as a passive investor, I do not know how you do it unless you're part of a community. Because if you're part of a community, you're going to be exposed to new sponsors, new asset classes, new investing strategies that if you're just sitting on your own, listening to podcasts, you might hear about some of them, but you're not going to know, hey, is this for real, right? You're not going to know how legit this is or how good one sponsor is versus another. Or, maybe you're into self-storage. Well, I know of 3 really good self-storage companies, but maybe there's 2 more out there that I don't know about. I'm not going to find that unless I'm part of a community. Right. And the reason why you need a community for this is because there aren't financial advisors that are going to help you with this, right? Because a financial advisor, one, they're not licensed for it, so they can't help you. Two, they don't get paid, so they won't help you, right? And that's not their fault. That's not bashing financial advisors. They cannot help you. So where are you going to go to get advice? It's the same. Like I said earlier, I do not write my own legal contracts. I do not do my own taxes. And it's the same. I want to get the best of the best. And to do that, I need to find sponsors that are quality. And the only way to do that is to find a bunch of people to help me find quality operators. And that's why I believe community is the absolute key ingredient to becoming an effective passive investor. Absolutely.
Yep. 100%. Yeah. Couldn't agree more, Jim. I mean, I'd say the same thing being active, but man, even more so being passive. How do you go about, while you're attempting to have success as a passive real estate investor, and maybe that makes you're busier if you got your other job, and I know you got a lot going on with Left Field. How do you make sure you're having success with your family, with friends, if you're a man of faith with that? How do you keep that, Jim, and make sure you're having success in those areas of your life as well?
It's complicated. No matter what you do for your day job, I mean, Left Field Investors is my day job. I'm a full-time passive investor and I run this community, but you got to stay focused on what's important and why we're doing this, right? Why are you going to work every day? Well, it's for money, right? It's to build wealth. Okay. Well, why am I building wealth? Yeah. Well, the wealth gives me financial freedom. And what does that give me, right? It's a path. What that gives me is different than what it might give you or somebody else. What I want to build wealth to create financial freedom so I can have time freedom. So I can do what I want to do when I want to do it, right? I watch my son go to school every day and I see him come home every day because I'm working from home. A lot of people are doing that now. But I also, I have financial freedom now. So if he wants to throw, go out in the backyard and throw a ball at 3:00 when he comes home from school, I can do that, right? Because I have the freedom, because I have multiple income streams and I can just stop and start when I want to. So for me, it's focusing on the important thing, which is to build wealth so that I have time for the things I want to do. So if I'm building all this wealth and all I'm doing is building the wealth and not taking the time that it's giving me to do the things I want to do with my family or friends or activities, then what am I even doing? So I think the critical element here is to stay focused in the time that you're in, but also allow yourself to go do the stuff that you're working for, right? Otherwise, why are you doing it? So I don't know if that made sense, but that's how I look at it.
It takes reminding yourself of that, Jim, because I think, almost everybody would agree with you. It's like, it's not just about the money. It's not just about having the money in your hands and having the money in your pocket. It's like, well, yeah, but what are you going to do with the money? And yeah, most people, I want to buy time. I want to buy time with my family. I want to buy time with my friends, time with the people I care about. And Jim, I always like to ask for a book recommendation. Anything you've been reading lately, or anything you point, maybe do you point passive investors toward a certain book or two to educate themselves?
I do. And I know Ryan Stieg was on here and said the exact same book, and I apologize, but it's the best one out there. It's Hands Off Investor by Brian Burke. Yep. Just like I say, if you are going to be a passive and syndication investor, you need a community. You also need to read this book. My 22-year-old daughter wants to be a passive investor. And I said, okay, step one, go read Hands Off Investor by Brian Burke. It's a fantastic book. It starts at zero. What's a syndication? And it goes into just super technical at the end, but everything in between, I dog-eared that thing. I took 17 pages of notes. Fantastic book.
Yeah. I'm reading it right now myself. And my coach had kind of said, like, hey, read this. It's good for an active investor, too. Cause it's like, this is what you're and I've been I recommend it to my entire, community of investors. It's a great book for them. And then I should read it because these are the questions they should be asking me. So these are the questions I should be ready to answer. Right. Yeah. Really good book. So thanks for that. Anything else you want to say about where people can find you? I mean, I know Left Field Investor is the main spot. I know you've got the great podcast if you want to mention that again, but where should we send people? We'll put it all in the show notes, but where's the best
you can go to leftfieldinvestors.com. Like I said, there's subscribe buttons up there. If you want to schedule a call with one of the founders, there's a button at the bottom that says contact us, and we're happy to talk to people if they want to. If they want to contact me directly, my email address is jim@leftfieldinvestors.com. Like I said, I talk to multiple investors every day, and I'm always happy to talk passive investing with somebody.
Awesome. Good, awesome. Well, thanks so much, Jim. Thanks for coming on. Thanks for sharing your experience. I mean, great experience that people can learn from. Maybe not make some of the mistakes that you made through the School of Hard Knocks, but learn from you. But my goodness, come and learn from, like you said, a community. I think Left Field Investors is the best one that I know of. But at least learn from a community, if not, Left Field Investors. So yeah, thanks for coming on and sharing that, Jim. It's been great.
Awesome. Thank you for having me. I had a lot of fun, Lee.
Yeah, take care.
Thank you for joining us for another great episode. I hope you'll take action on what you've learned today. If you enjoyed today's show, please consider leaving Lee a 5-star rating and review. And check him out on threefoldrei.com. Until next time, 1 Timothy 6:17.